Moving on now to JSE company news. Aveng welcomed the second half of the financial year in a hard-wearing position. The infrastructure and mining group's restructuring efforts are bearing fruit as it delivered double-digit profit growth, with headline earnings per share jumping 58%, boosted by a 36% increase in revenue. And joining me now to help us contextualize these numbers is incoming Aveng CEO Scott Cummins. Thank you so much for your time, Scott, and great to chat to you as you're obviously going into the seat of a CEO. Just looking at the interim period, please characterize for us this milestone of returning to profitability in this period.
Yeah, look, thank you very much for having me. It's extremely pleasing to see the hard work that's been put in over the last number of years for Aveng in restructuring the group and divesting some parts of the business that we didn't want to form the future, and consolidating down to McConnell Dowell and Cummins, and seeing those two businesses produce the results that they have for the half year is certainly very pleasing, and very pleasing for me as an incoming CEO to be given the company in its current state. So we're looking very much to the future, given to where we sit today.
Well, I mean, I did look at that breakdown, and obviously you're talking about McConnell Dowell and Cummins, but also, I mean, those seem to be doing the heavy lifting, but not so much Aveng Construction, South Africa there. Talk to me about that divergence.
Yeah, so I mean, we have McConnell Dowell. That's a great part of our organisation now. 90% of the revenues have come from that part of the business, and then of course Cummins is remaining here in South Africa. So as a consequence of McConnell Dowell being such a significant portion of the business now, as you would have noted, we're now releasing our results under the Australian denomination. So everything is in Australian dollar now, and we've moved consolidating our executive of the team in Australia. So we're close to the great majority of the operations. It just makes sense for that move to evolve with the company as it's now structured. So that's in essence what's occurred with the great majority of the business in that part of the world: Australia, New Zealand, and Southeast Asia. Now, I do want to point out that, of course, that doesn't mean that our commitment to mining in South Africa is any less. That's certainly not the case. And we're going to be very focused on ensuring the continual improvement in performance of Cummins. And as we've seen over the last 6 to 12 months, we're seeing that part of the business steadily improve in its performance as well.
All right. I did see that your gross margin fell by 1.1%. I understand that this was due to higher costs in Australia. Was this foreseen, and how can that margin be protected from here on out?
Yeah, so we've had particular circumstances there in Australia coming out of the COVID period, where there was a lot of stimulus put into the marketplace by both the federal and the state governments all around Australia, which was great news. A lot of projects coming online, but you can imagine what that did. It put a lot of pressure on the supply chain, a lot of pressure on subcontractor being able to support all of that work. And as a consequence of that, we went through a period of pretty significant escalation, well, hyperinflation, if you like. And as a group, we employed various strategies to deal with that. And although our gross margin has gone backwards a little bit, given the circumstances in which evolved over the last 6 to 12 months, we're actually pretty pleased that a lot of the mitigants that we put in place have worked effectively to minimise that impact of hyperinflation during the period.
All right. Paint a picture for us, because I understand that you are in a new phase in your strategic journey. So paint a picture for us of that.
Yeah, so I think the point I'd like to get across here is that the strategy that was put in place, 5 years ago hasn't changed. I like people to think of, we're not changing the strategy, we're just entering into the next phase. And the next phase is one of consolidation. The next phase is one in which that we want to have the organisation as it currently stands now with McConnell Dowell and Cummins working as efficiently and as effectively as we possibly can. And that's where the focus is to work work efficiently and effectively so as we can raise those margins back up to where the market expectations are, where my expectations are, back up towards what's previously been reported to the market of 3+% is what we would like to move towards. It won't happen instantly, but we think by steady, progressive, continuous improvement across those businesses, not distracted by the issues that the leadership has had to deal with in the past, we'll be able to move that margin up progressively over the coming periods.
Let's go back to Cummins. Of course, you have said that, most of the business's operations are outside of South Africa, to the point where you've even changed the reporting currency. But obviously, it doesn't mean that you are ignoring your South African operations. I do understand that there are some expansion plans there. Just talk to us about, the muscle and, the capacity that you have for that.
Yeah, so there's been a lot of investment in Cummins recently. We felt it was underinvested if you go back, last number of years. So over the last 12 months or so, some real strategic plans have been put in place to invest in the equipment in Cummins and basically bring in new equipment, whether it be through lease or purchase or other means to enable the business to improve. If we have a look at the portfolio of Cummins right now, it is very, very concentrated on the manganese commodity and in South Africa. And we think it just makes sense to broaden the portfolio of where the Cummins revenues come from, and broaden it in the sense of countries, commodities, currencies. So with time, we'd like to see less concentration risk on one specific commodity in one specific country.
All right. Of course, this was for the first half of your financial year. For the second half of the financial year, what are you going to be concentrating on and focusing on to ensure that you finish off the financial year on a strong footing?
Yeah, well, for me, it's all about ensuring that we've got the organisation working as effectively and as efficiently as possible. I'm not seeking rapid increases in revenue. This is all about now consolidation, ensuring that the way we've got things set up can work effectively, and increasing those margins from a percentage basis progressively into the future. So as I can come back every 6-month reporting period and say, yes, we've increased that percentage margin again over what we talked about in the previous 6 months.
All right. Well, thank you so much for your time, Scott. And it was really great chatting to you as you are coming into the seat of CEO. Thank you so much. That was CEO of Aveng Group, Scott Cummins.